just gonna, there we go, share my screen. Here we go. Trying. Ah, and sneezing at exactly that moment. How's everyone doing? How's everyone doing? Okay. So sorry, we were in a panel, a trader panel, obviously just now, and now I'm presenting as well. So I'm going to quickly run through the market. I'm going to keep today's one shorter, so we'll finish at 30:30. Or what time? What time? But we'll keep it quick, Sam. So just let me know. 20 minutes. We'll keep it shorter than normal. For now. For now. Basically, there's a couple of things I want to talk about. As usual, these are the ones we go through. Let's have a look. We want to see where are the best trends at the moment. And I spoke last week or the week before. I also spoke about watching for those trends to change. So we were looking for some particular setups. But let's have a quick look at the global indices. So the global indices are looking relatively bullish at the moment, but, and this is the reason that I always have I always also have a price action one as well, so that I can compare the two. Excuse me for 1 second. I just needed to blow my nose, and you don't need to see that. So, and let me have a look at the chat so I can answer any questions that you might have as well. Okay, so all right. So first of all, quickly talking about crude oil as well. I was saying that I've been for ages going back at least to through until we got through to June, July. I was saying gold was overextended. It should have had a correction. Now it just hasn't. It just keeps going up. And that's part of the reason that I believe gold is actually in a bubble. We've had that happen in the past. So we had it happen over here. And I think we're in a similar type of bubble at the moment. So we could see gold keep going to somewhere around $2,800 is a relatively reasonable expectation. It's very overextended from a monthly perspective, but when you look at it from a weekly, yes, it's now also overextended on a weekly basis. And from a daily, it's not. Actually, it doesn't look so bad. A little bit far away from the moving averages, but not ridiculous. But it kind of gives you a sense of where I would then expect price to turn around. Right. So, okay, looks like Gordon is trying to join. I think Gordon was going to be your original presenter. So if you can join, then that's fine. I'll hand over. But in the meantime, I just want to talk about this. So what do you do as a trader? And this was really nice to hear this confirmed by other trading colleagues as well, saying, oh, and George is joining. Wow. Okay. So we got a lot of different people coming in. What's going on? Yeah. Okay, I'm just going to keep going with this. So we spoke about that. Basically, when you get to a point where you know price is overextended on a higher time frame, you become more cautious as a trader. You can keep trading it, but you also have to accept that now you're in that kind of territory where the probabilities of a 3-to-1 move become less and less. And the problem with gold is it's in uncharted territory. So you have to kind of go off numbers like 2,800 or maybe fib extensions, but it gets particularly tricky. So we've had a shallow pullback here. We might just get a surge up to here, and then we might see a bit of a reversal. For me now, I am incredibly cautious around this. I'm waiting for that monthly bearish candle. I'm looking for a swing high basically here, and then I would start looking for some temporary trades to the downside. So that's where I'm just very, very cautious on that. But how does it look? What does it look like when we kind of compare it on, when we look at it on the system? It continues to be quite bullish. Okay, so just be aware that those signals are still there, but I wanted to give you some context around what the price looks like when you aren't just looking at WaveRider. WaveRider is very good. All I'm trying to do is supplement WaveRider with context. Okay, so next up, let's have a look at crude oil so we can kind of cross this one out. So crude oil for me, this looks to be more of a bearish kind of a setup when you get a series of lower highs coming into a key level of support. So what I'm going to do here is I'm going to draw two levels. one here that connects with all three levels here, and a second one that just includes these two lows down here. So because generally speaking, once you break through these, I know I can see a couple here, we would probably then expect a bigger correction down towards these lows. Cool. Okay. And so I'm expecting the pressure right now looks more and more bearish. We look at it from a weekly perspective, we get lower highs again. We're getting lower highs. There's a lot of pressure here. But most importantly, ladies and gentlemen, in a situation like this, you want to be looking at the MACD, for example, or your momentum indicator of choice, if it's RSI, whatever. Here you can see it's starting to test these lows. It's producing lower highs, lower lows. So the indicator is also bearish. That's good. That's important because obviously if this is bearish and this is bearish, then the likely direction is going to be to the downside. But we're still, this is a very much higher time frame thing as well. From a daily perspective, you can see that it is it's sort of still trending up. Excuse me. So I think the important thing here is to maintain perspective, that if you're looking for long positions to go long on this, they should be short term. So in other words, you understand that each of these levels here could be the ceiling that it hits, that the longer term direction is very unclear. So that's the only thing you need to be aware of. The pressure does look as though it's building to the downside, and there is a fair possibility that around about somewhere between January and March, we could see oil break down, and it's been building up going back, all the way to 2022. And therefore we could see a breakdown. So that would be almost 2 years before it broke down, and we could see some nice moves. The move would be significant, potentially at least down. I would think that if it does do it down towards the $50 mark, maybe a little bit further. Okay, so I've got Gordon in. Sam, you need to let me know, do I hand over to Gordon or what's the story here? I'm happy to do that, by the way. Okay, cool. Let us do that, guys. Thank you very much. All I've done is discussed the gold and crude oil, and I'm going to hand over to Gordon. So everyone enjoy. It's only Sunday morning for me now, so I want to say enjoy your Sunday evenings, and I'm going to enjoy my Sunday.
Hey, Adam, thanks very much for pitching in there. Greatly appreciate that. You guys hear me okay? All right. I'm going to share my screen. There we go. Hopefully that'll come in. Thank you, thank you. Sorry for the delay. I'm in a different time zone, and I got my clock a little mixed up. So a different time from what I'm usually in. So anyway, all right. Gonna look here at chart in the U.S. stock market, because what's going on right now, of course, in the U.S. is the upcoming election, and I want to give you a sense of what I'm seeing is influence in the way the market's moving, and whether or not that's going to tell us anything about what to expect in the next couple of weeks. Going on right now with the election is earnings season. I happen to think that earnings season is going to have a bigger impact on the markets than the election. So let me start here though, and just kind of point out that since this period of time right here, see, now this is why I thought the election should have such a big impact right now, and that is that on these 3 days, the market drops like 7% from its high to its low. And that's a big deal. And this is shortly after, just almost immediately after the whole, switch from Biden as a candidate to Harris as a candidate. Remember that the market hates uncertainty. And there was such uncertainty over that activity that the market dropped rapidly. And I remember thinking, yikes, there isn't any economic news, there isn't any, uh, global conflict news or global disaster news that should make this move like that. So I had, a couple of positions that had dropped drastically but hadn't stopped out. I thought, I'm just going to hold on to these because I think it's going to come back. Of course, I didn't realize how much faster it would come back and even hit a new high from this little moment right here, and an ultimate high, a new high since then. I didn't realize that that was going to happen, but the fact that it did tells you that this was probably not driven by anything other than the uncertainty of the new candidate. And so this drops fast. And ever since then, look at how the market has, see the size of these candles would go from bigger to smaller as we're coming up here to this top end. That's important because what it says is all the fear, or I should say uncertainty creates volatility. All the volatility that's there slowly seeps out of the market, right? Well, in the S&P 500 and the NASDAQ 100, the two single biggest stocks that have the most influence on where they move are Apple and Microsoft. And so if you were to overlay either one, first we're going to go Apple, on top of them, and just compare it, we're going to make it so that right from that point, we're comparing right from that Thursday, August. Okay, you can see that Apple, you see that gap between the line of Apple's closing prices and S&P/Y. See how Apple is up above, right? That tells you that Apple was leading the market back up off of its low. And notice how this, Apple hits a new high well before the market does, before the S&P 500 does. And so this is, just a great example of how Apple leads the market, and wherever Apple's going to go, the market is likely to continue going. And so far, we're still up ahead. I mean, we're close on this little downswing right here. We're close, but Apple is still ahead. Let's add Microsoft to this chart and see if that gives us any additional insight. And when we add Microsoft, it gets a little weird. Notice that Microsoft is not, it started, leading, but now it's trailing. So that's a really interesting thing because that shows that we've got a little bit of conflict. Well, the way to sort of resolve this is to put the two of them together, Apple and Microsoft. We have to kind of equalize for pricing. So Microsoft is 400, Apple is 230. So that means we're going to do this. We're going to say, I'm going to add Microsoft plus parentheses Apple times 2. Now mathematically we could say 2.2 or something more specific, but this will be close enough. Whoops, better get the symbol right. There we go. So this is basically a portfolio of half Apple and half Microsoft, or something close to it, right? And we're going to see how that combined portfolio looks compared to the S&P 500. And we'll hide Apple and Microsoft individually. And so see, this is from that point right there where they start. You see the combined action together is not as heavily dragging on the market. If it were Microsoft by itself, it would really be pulling the market down. Here, the two of them together led, but now they're trailing. which tells us that the market is probably kind of at a high, kind of peaking, probably just, it's not ready to, jam forward because it doesn't have to catch up with its leaders, or its leaders aren't going to go so far ahead and pull the average higher. Right now, the leaders are dragging on the average, right? I mean, that's just based on since this moment of volatility. So we can kind of see that on Wednesday and on Friday, there's a lot of indecisiveness in those market pricings. See that? Way down and back up, go way up, but come down. So it's really holding at some equilibrium, and that is important because I think it means that the market is interested in. I mean, it's comfortable all it is right now. It's a little nervous, could go either way, but it's comfortable. And it's just like this is sort of balance right here, which is strange if you have more. If I go from the beginning of the year, um, this is a bigger, different perspective. You can see how when these two together are way out in front, the market moves up. When it starts to lag, then it drags and pulls behind. As long as these things are up above the market, then it's going to exert an influence for the market to go higher. And here, same thing from this longer term perspective. We're creating a little bit of a drag on the market. So probably we're going to see the market pull back a little bit and then turn back up, but sort of hang right around this range right here because that's the sort of equilibrium that the market has been willing to establish. And I think that this is probably likely for now until the election, not very far out. Wednesday, or sorry, Tuesday, right here is the election. So just right in there, I think the market is telegraphing us that between here and here, we'll probably see prices. I don't know if they'll stay inside this range, but they'll probably hover around. If in fact they go above these lines, they'll probably come back into it right up until Tuesday market close. After that, the market returns start, or the election returns start coming in. We could probably see it break out, and whichever way it breaks out is what I would guess is the direction it's going to keep going for the next week or two. But that would only be true if, in fact, there were no meaningful earnings announcements that were coming up along here. So let me open a different chart. Let's see on, well, yeah, Meta would be a good one. This is what I'm trying to get to. Sorry for all that. This is the earnings announcement for Facebook, Meta, and it is showing us that Wednesday, uh, October 24th, oh, sorry, the 30th of October 19th, on the 30th of October. So before earnings, we've got Meta happening, and we've got Apple going off also on what is this, the 31st, and Amazon, Microsoft, there we go. Microsoft is happening on the 30th. Nvidia's a ways out, no worries there. Tesla, it's already happened, and Tesla took off, right? But it didn't push the averages up. Amazon is happening on the 31st. Apple, Microsoft, Amazon, oh, and Google, Alphabet, yeah. All right in there. Okay, so what we've got are all the big things, all the big companies. Sorry, moving a little slow there. All the big companies are happening in the next week, in this period of time between their earnings announcements are happening in between the now and the election. That's the thing. So although I drew these two lines here going forward and going out until the Tuesday of, not next Tuesday, but a week from, right? Well, inside of all this is this next week, a big earnings activity. So this is going to test whether or not the markets really care more about the elections or their own earnings. Okay. So if we see prices jump outside these lines during the earnings announcements, then again, same thing. I would say that whichever way it's going to break out of, that's probably what we need. Okay, we good? Yeah, no, I hopefully I haven't crashed. Oh, okay. Are we back? Are you guys hearing me all of a sudden? Let me know if I'm going, or from the text, Sam, I just couldn't tell. Yeah, we're okay. All right, sorry about that. Okay, so these lines, these lines are what you should watch over the next. We're almost right in the middle of them. So for the next week, this 584.5, 585 on SPY, and 575 essentially. So 85 and 75. Just watch those support and resistance lines, because if in fact we move out of them, either one, then we will probably keep going from there. What Adam showed you on oil and gold are good indications also, because how are the commodities markets thinking about this upcoming election, right? Well, this period of time in here, we're going to see all kinds of movement in the individual stocks, but will it pull the averages up or down? And I mean, I would expect that it should, but if the markets care more about the election than they do about individual companies' earnings, then I think you'll see this stay inside this range all the way until the U.S. election. If in fact it breaks out before, then that tells you the market isn't worried about the election. The market doesn't care if, at this price point, the market does not care if Kamala wins or if Donald Trump wins. That's how I would read the chart. Okay. I've been very curious about, I'm sure that you guys have seen stuff like this. the poly markets, it gets a little bit more press, but this market here, Kalshi, they they're actually U.S. regulated. So poly market is outside the U.S. U.S. People aren't even supposed to participate in it, but this market is U.S. regulated, and just right here they got for the first time ever a U.S. Um, uh, platform is able to create this market. They had to sue the CFTC in order to be able to get that done. They won they won the lawsuit over the summer, and then it took all the way up until beginning of October before they could get this market open. But now there are $80 million worth of bets being made on this particular thing. And this is really quite shocking. I'm not sure what it was that happened on the 10th of October that made this huge divergence go. But the divergence just keeps growing. And right now, this calcium market has 62% probability, a 62% expectation that Trump will win the election. Of course, this isn't a poll, this isn't voters, these are just people betting money on what they think is going to happen. If you were to go and place that bet right now, you could buy Kamala Harris for $38 as an example. And if she wins the election, that bet would pay off $100, and so you'd make a $62 profit, right? So 38 would turn into 62. Great, almost a 100% return, right? If you were to buy the bet on Donald Trump right now at this price, you would win. 62 is going to turn into 100, so you would win like a 50% kind of bet, right? 50%, well, more than 50% return. So it's kind of interesting. It's like, wow, I could win more than 100%, or I could win just 50% with one. But that's just an artifact of what the pricing is right now. And so, as I say, this is the first time it's ever been done. The election markets aren't, don't have any impact on the election itself. It's just people laying bets based on their opinion. I'm interested in this. I'm following this because 4 years ago, I thought that there were a lot more people who would be willing to vote for Donald Trump than Joe Biden. However, not this market, but poly market, other predicted, and the other betting markets, they had Biden winning by a narrow margin. They showed people more willing to bet on Biden. And that's the only other time I've followed the betting markets close enough, and that I think there were enough people. I think there were betting markets available back in 2016 as well, but I wasn't paying any attention to them, so I don't remember. So that made me think this last time in 2020 about the Joe Biden prediction. I thought, well, if they got that right, could they be getting this right now? No idea. Some people claim, oh, it's just Republican fat cats throwing money at it. It's like, well, I mean, they got to be smarter traders than me then, because if they're just trying to influence the election by throwing in a bunch of money this way, they're going to just lose that money. I mean, is that what you want to do? If in fact it's going to go Kamala Harris, then that money is just sunken down the toilet. And what about all these people that are betting for Harris? It's not like there's nothing going on over here. If all the bets were Donald Trump and none were Kamala, then you'd see Donald Trump at 98% and Kamala at 0, right? So about 2 for $1 are going to Trump right now, but that's right now, and just it's slowly moved that way. So if I were to look here from October 10th to October 27th on the chart. So right here, there. Oh no, there, October 10th until now. I mean, we're actually inside this range. So as far as the market pricing is concerned, we began to hit that sort of equilibrium. We've sort of stayed inside this price range of equilibrium ever since then. So weirdly, this is the moment. That's the moment where the betting started to diverge. This is the moment where the market said, okay, we're fine. We're fine with whoever wins. We're not worried about the outcome of the election. Now, if in fact the betting markets were predicting accurately that Trump would win, then what this would say is, okay, the market is fine with Trump winning, and we're going to go with it. I don't think that's what this is saying, but if those two facts were together, then that's how I would read the market. Which is why I'm very interested to see when these earnings announcements start coming in on Tuesday. Um, the early one was Meta or Google, can't remember, but the earliest one to come in will come in Tuesday, and then Wednesday, and then Thursday. They'll all three follow. I'm very interested to see if the market gets pushed out of this range. My expectation is that it will. It will because what they're saying, what these prices are saying is we're not too concerned about the market. I don't think it's saying, hey, we know Trump's going to win, and we're happy about it. I think it's like, well, whatever, whoever wins, it's not that important. And when earnings come out on the bigger companies, and the market will think that's very important. And therefore, I think it'll break, and whichever way it breaks, that's the side to pay attention to. If in fact it stays inside all the way up until the election, then it tells you that the market thinks the election is more likely to be important and influential than the earnings. That'd be a huge statement. That would be a very huge statement. I mean, it doesn't sound that big because you think, oh, the election, that's everything. No, no. I mean, it takes a lot for a president to do stuff that ends up influencing the markets in some way that people can anticipate and predict. Analysts, business analysts, or they don't typically think in terms of the market having some huge impact immediately just because somebody got elected. Donald Trump's not even going to be put into office until January, assuming he gets that right. So, or Kamala Harris, she wouldn't be inaugurated. She's the vice president now, but she wouldn't become the president until that point, despite what it looks like with Joe Biden's health, so on and so forth. So I don't know. I feel like this chart is not reacting to the uncertainty of the election and the idea that the election will turn into something big. I think it's much more likely to be reacting to the fact that, hey, we're coming up on earnings. We're not going to do anything until Tuesday. And then we're not really going to do anything until after Thursday, once the biggest companies have all reported and we have a sense of what to do and where to go. Now then, I had said something in my former, sorry, CL futures. I had said something in my in a commentary a few weeks ago when Adam and I got together and gave our opinions on, hey, what happens if various things. But what I had said is that crude oil will probably have a downward slant if in fact the market thinks that Trump is going to win, because the anticipation is that Trump likes energy production, and so that he'll encourage more of that. Well, shortly after I had said that, it broke that support line, and it's gone back and forth, but it's kind of hung around mostly lower, and it just closed on Friday higher above that particular line, but and it does seem like it's trending higher, so maybe we'll see that go up. I feel like the fact that it's it's kind of dipped down and sort of hanging around in there is partly the market sort of thinking, hey, Trump might win and oil prices might go lower as a result of him winning. And so I feel like there's that influence hanging around there. I'm going to be watching closely over the next week, paying attention to that price right there, about 71.5, and trying to determine, is the price going to drift lower away from that, or is it going to get up above and keep going higher and higher still? Higher would seem to indicate the potential for a Harris win, lower for a Trump win. I mean, there are lots of other factors, so there's all sorts of other things that could happen, the Mideast conflict and so forth. But generally speaking, I'm trying to look at this price with that lens. Now, what does that mean for Forex trading, right? Well, generally speaking, if the US market continues to go higher, that is favorable for the euro US dollar trade. The US dollar tends to, the stock market tends to run counter to the US dollar. Not always, but if in fact the dollar gets cheaper, US stocks mathematically become more expensive. And so it's possible when you have a strong economy that you could have the dollar and US stocks both going higher. But most of the time, you just sort of watch and say, whichever way the euro's going, the US market is also going to be going, or vice versa. But right now, we have this incredible divergence, right? Huge move down in the euro and the US dollar. My favorite pair to watch for forecasting the US market is the Aussie yen, because it's so tightly correlated to the NASDAQ. And what are we doing here? Yeah, we had the big slide a while back, but right now we're just sort of holding in a little bit of equilibrium and hanging in there. That to me says, same thing we were looking at. The market is moved into a bit of a state of equilibrium. Let me check the dollar again. So the dollar again the dollar is moving higher against the yen, just sort of pushing up, and that's the difference between the Aussie yen and the dollar yen, is that US dollar influence. This US dollar is partially, this strength from October to, the US dollar yen strength and the euro, well, I'll just put the euro on top of it here. And the euro coming down all that time. Okay, it's there. See, there's the euro coming down. There's the dollar going, or the Aussie, the dollar yen going up, right? So in here, there's a little bit of dollar strength, and there's more euro weakness. That's why we are going to parse that out. They're not exactly the same. If you just look at the euro and the dollar all by itself, or the euro and dollar pair all by itself, then you can't quite tell which one is the stronger one, which one is the weaker one, which one's doing the pushing and so forth. You compare that with the dollar yen, and then you compare the dollar yen with the Aussie yen, you can sort of tease out the moves. And I think what we're seeing here is that there is some dollar strength, but there is also euro weakness, separate and independent from what's going on there. So this is surprising to me, because the Aussie yen holding still like that makes sense. The market is at equilibrium. Once the earnings come along and the election comes along, it'll break one way or the other, and then you'll see more of a trending move. I believe that you'll see that also on the Aussie yen. But I'm a little more perplexed about the euro and dollar. What's that going to do if the market turns around? I'm sorry, if the election goes one way or the other? How would you predict that, right? And I feel like if I look at oil is leaning towards a Trump influence, because maybe it's coming cheaper. That also tends to be the idea of dollar strength, right? So if you have US dollar increasing, it makes the price of oil drop. And uh, and so the dollar is increasing in strength, euro is decreasing. I mean, I guess I would say that you know, over the next week we'll probably not see this just continue. We'll probably see this reverse a little bit, but stay in a range. And then according to, you know, how markets break from the election, then these will do similar. But my guess is that after they hit this equilibrium over the next week, that they're going to break and trend. And it does look to me like the way they're going to trend is the way they're going down. Like we're going to see a continuation of dollar strength and euro weakness. And so that you could anticipate over the next month of, you know, the month of November, the potential for there to be um, uh, the the dollar yen to continue higher and the euro to continue lower. That that would be my expectation. However, between now and the US election, probably going to see some sort of sideways move and fluctuation in there. So look for, you know, reversion to the mean trades. Well, I would be interested in like hitting the euro short multiple times in the next week, and maybe the dollar yen long in the next couple of weeks. Just taking, you know, small profits, sort of reversion to me, buying low, selling on the dollar yen, and shorting the euro dollar, you know, at its tops and take a little bit. Don't try to ride for a longer trend yet, because I would watch to see from post-election which way it's going to break and favor that trend. Okay, well, it was a lot of information. It took me longer to say all that than I thought that it would. Any questions before we wind up, or any market that you'd like me to review before we quit? But as you can see, just to recap, the huge influence of earnings and the election, they're all kind of compressed in the next couple of weeks. And I think that's going to set up the opportunity for a very significant move once it breaks that 585, 575 range on SPY. All right, if we have no further questions, then hopefully you got some good things to be interested with and to watch over the next few days. Check out those earnings and what the result is for Apple and Amazon and Google and some of the others, and that will give you a good feel of where the market's headed between now and the end of the year. Until next time, everybody, take care and trade well.